when Silicon and Signature failed, remember they issued the BTFP, the Bank Term Funding Program, and that was a 1-year loan with onerous terms. They had to pay, they had to post collateral mark to market at about 5% interest. And if you look at what the liquidity in the banking system looked like right before they started that, they put that money in because things were collapsing as liquidity was drying up. Bill Holter always talks about this environment being one of a potential liquidity crisis. Well, it looks exactly like it did in 2019, right before the repo market blew up, and exactly like what it looked like in 2020 when the stock market blew up. And that's exactly what it looked like when those banks failed, a liquidity crisis. So they injected all this money. Now, guess what day the BTFP is set to be drained to zero? All of the loans must be paid back. You have a guess what day that is?
I think it's the day before the election.
It'd be the day after the election.
The day after the election.
And so you want to talk about a rug pull. If they really wanted to pull the rug and set Trump up for this kind of, if he wins or whoever wins, maybe if it's Trump, maybe they like it, maybe they extend it, or maybe not. Maybe in the midst of craziness, in terms of half the country being beside themselves, and what we've seen over the last few years is any indication of what we could see. It's frightening. Add into it people losing their money. And as Gerald Celente often says, when people lose everything, they lose it. So, you know, you got $5 million in a bank and all you get back is $250,000. Are you going to lose it? I think a lot of people would. I think people need to be made aware of this. And the fact that this isn't front and center, then again, it is absolutely mystifying to me.
Did you know there's over $17 trillion sitting in money markets right now, with half of that being pension funds and insurance companies? If a major bank fails, not only are your savings at risk, but so are the financial foundations of millions of people. Andy Schectman warns that we're heading towards a banking crisis unlike anything we've seen before. Recent bank collapses, bail-ins, and the FDIC's 7 cents on the dollar coverage are just the beginning. And the kicker, the day after the next election, could be the breaking point, when billions might vanish overnight. Imagine waking up to find out your money is gone. This could be closer than you think.
Bail-ins and money market gating. 2 weeks ago, we talked about money market gating and your experience in that. And you know, the Dodd-Frank Act, after the 2008 crisis, addressed money market issues as everyone was yanking their money out of Lehman Brothers as they were failing, destabilizing the money markets. And let's remember that there's $7 trillion or just under in the money markets right now. It's not just all John Q. Public. It's not us. It's half of that money or more is institutional, pension funds and insurance companies and whatnot. And this is why they imposed money market gating in the Dodd-Frank Act, because it will, if the buck were broken and the money market went upside down, it would blow up a lot of things, not just our pocketbooks, but pensions and insurance companies and all of these things that have, over the last 2 years, left the banking industry in search of yield. So at the same time, of course, they wrote in money market, or excuse me, bail-in legislation. And you know, when it originally happened, and when you and I were talking about it at least 20 times, it was phrased in, or kind of framed in the light, well, why would they write it into law if it wasn't ever going to happen? So when Silicon Valley Bank and Signature Bank failed, banks that held Oprah Winfrey's money and all the tech startups and hundreds of millions in uninsured deposits, the senator from Oklahoma was furious, and rightfully so, when he was questioning Janet Yellen in the House inquiry. You know, Madam Secretary, you just bailed out these banks. What the heck? That's illegal. Yes, sir, it is. You're right, Senator, but it you know, was an uber majority vote, as she says, from the FDIC, the FOMC, which is the Federal Reserve, myself, and the president. We deemed that they were too systemic and they needed to be bailed out. Of course, it won't come at the expense of the public. Yeah, right. The FDIC will handle it. And we've talked about the FDIC's lack of coverage, roughly 7 cents on the dollar, 148 billion backing 18 trillion. Well, that's not a good recipe. But anyways, the banks that have been bailed out subsequently, or that have failed, I should say, they haven't been bailed out, but they've been consolidated, as we've been told by Jerome Powell we could expect to see. You know, crumbs that they drop, little crumbs. There's a crumb. Yeah, they're gonna consolidate. That's a nice way of saying they're banks that are going to collapse, and other larger regional banks or JP Morgan, those kind of banks, will assume their position. And that's what's happened so far. So this has not really been noticed. Not only do most people have no idea, even sophisticated people have no idea what bail-in legislation is. They have no idea what money market gating is. When there have been banking problems, and let's remember, we added 14,000 clients in 45 days, the panic that was the banking problem, and yet it was brushed over, glossed over by the Fed coming in or the FDIC and bailing everyone out, right? Everyone was made whole. Of course, it's a bank. We've been putting money in our piggy bank since we were little kids. The bank is safe. Putting it into an investment isn't safe, but a bank is safe, right? Well, the Dodd-Frank says you are an unsecured general creditor, i.e. last to be paid. So let's talk about the First National Bank of Lindsay, Oklahoma. And I'm going to read a couple things to you so that people really understand it. For those who haven't heard this or haven't heard me talk about it last night or earlier today, Friday, the First National Bank of Lindsay was closed by the Office of the Comptroller of Currency with the Federal Deposit Insurance Company, the FDIC, appointed as receiver. The OCC acted after identifying false and deceptive bank records and other information suggesting fraud that revealed deception of the bank's capital. The OCC also found that the bank was in an unsafe and unsound condition to transact business and that the bank's assets were less than its obligations to its creditors and others. Now, let's just highlight that. I want people to remember what I just said there, that their assets were less than its obligations to its creditors and others. So highlight that and remember that for a moment. The OCC is referring the matter to the U.S. Department of Justice, which has a wide variety of tools to hold individuals accountable for criminal acts and focuses on victims in all of its matters. Okay, that's good. To protect depositors, the FDIC has entered into a purchase and assumption agreement with the First Bank and Trust Company based in Duncan, Oklahoma, which will assume the insured deposits of the failed bank. Now, this bank has 7 million. It's a small bank, only 7 million in uninsured deposits, right? Anything over the FDIC limit, 7 million. Not a big bank like Silicon, which had hundreds of millions. This has 7 million. So the sole office of the First National Bank of Lindsay will reopen as a branch of First Bank and Trust Company during its normal business hours on Monday, October 21st, just a couple of days ago. All depositors of the closed bank will automatically become depositors of First Bank and Trust Company, and their insured deposits will continue to be covered by the FDIC. Okay, that's good. And customers are not required to change their banking relationship to main deposit insurance coverage. All of this is good so far until for uninsured depositors, $7 million in uninsured deposits in this small town in Oklahoma. Ironic that it was the senator from Oklahoma that was grilling Janet Yellen. The FDIC has announced it will make 50% of those funds available. That's $3.5 million of the $7 million to depositors starting Monday, October 21st. Now, here's the kicker and what you mentioned in the onset, with the possibility of increasing that amount as assets from the failed bank are sold. Now remember, the assets are less than the liabilities. So when they sell whatever assets they are. Now, I was doing an interview with David Morgan today and talking about this. And he said, Andy, let me stop you. He says, I've been studying this stuff for a long time, and you're right. And what happens is that extra money, they're not going to get it if they are going to get it at all. By the way, you know, it's 4 years they have, up to 4 years to receive this money, as you and I have talked about before. But he said, it's my understanding that these people who have been affected will receive shares of the new First Bank of Duncan or whatever it is here. And so they're not going to get cash back. They'll get shares of a new bank. This is an eye-opening experience. And in essence, you have $1 million in the bank. You're going to buy a new home. You're building a new home. You're under contract. It fails. You get your $250. Okay. And in this case, because it's a small bank and there's only 7 million uninsured, of that million, you're getting 50% back right away. So that 750,000 is uninsured. You're going to get 375 plus your 250 is 6.25. That other 375, bye-bye. You ain't getting it. And you might get some shares, maybe possibly, as the thing says, over the next 4 years. Now, my question to you is, where is journalistic integrity? Where are the reporters? Where's 60 Minutes? Where's 2020? Where is the outcry? Where is this? Why is this not on the front page of anything that is news or on the opening of any news story? Why isn't it all over CNN and Fox News and Bloomberg? It's a joke. And it's a trial balloon. There, look, this happened. It was public information. Didn't you see it happen in Lindsay? So all that it will take is for a bank to be bailed in, a big bank, really bailed in, and maybe they don't even get the 50%, or a money market gating environment to trigger craziness. I would like to add one last piece to this before I take any questions or comments from you. When Silicon and Signature failed, remember they issued the BTFP, the Bank Term Funding Program, and that was a one-year loan with onerous terms. They had to pay, they had to post collateral mark to market at about 5% interest. And if you look at what the liquidity in the banking system looked like right before they started that, they put that money in because things were collapsing as liquidity was drying up. Bill Holter always talks about this environment being one of a potential liquidity crisis.
Mm-hmm.
Well, it looks exactly like it did in 2019, right before the repo market blew up, and exactly like what it looked like in 2020 when the stock market blew up. And that's exactly what it looked like when those banks failed, a liquidity crisis. So they injected all this money. Now, guess what day the BTFP is set to be drained to zero? All of the loans must be paid back. You have a guess what day that is?
I think it's the day before the election.
It'd be the day after the election.
The day after the election.
And so you want to talk about a rug pull. If they really wanted to pull the rug and set Trump up for this kind of, if he wins or whoever wins, maybe if it's Trump, maybe they like it, maybe they extend it, or maybe not. Maybe in the midst of craziness, in terms of half the country being beside themselves, and what we've seen over the last few years is any indication of what we could see. It's frightening. Add into it people losing their money. And as Gerald Celente often says, when people lose everything, they lose it. So, you know, you got 5 million in a bank and all you get back is 250,000. Are you going to lose it? I think a lot of people would. I think people need to be made aware of this. And the fact that this isn't front and center, then again, it is absolutely mystifying to me.
Now that you know how fragile the banking system really is, you're going to need to dive deeper into what happens when the next financial shockwave hits. So don't miss the next important video on this channel where we break down exactly how you can protect your wealth before it's too late. Click here to watch it now.